Hello everybody, welcome back to a new video. We have seen a lot of layoffs last year in a lot of different sectors. For instance, look at the data that we have here in this little diagram. We can see some of the world's largest companies, businesses that you may be aware of, banks, and all sorts of other brands laying off large numbers of staff. We can see things like Citigroup, Boeing, Intel, Tesla, UPS, Amazon, Unilever, Nissan, and some other brands, many of which you'll have heard of, many of which many of us interact with on an almost daily basis. So this is important and this is significant. Not only are we seeing this trend in 2024, it now appears to be following us into 2025. Already this week, we're seeing some of the world's largest companies laying off more staff. For instance, we have this article from a day ago speaking about how Bank of America is looking to eliminate some investment banking roles. And we've seen similar things coming out of Goldman Sachs fairly recently too. Anyway, we're not going to be focusing on those sorts of industries today. We're going to be focusing on another significant industry, and a company that you may have heard of before. We're talking about Chevron. So, what are we looking at here? We're looking at an article from February, around about a month ago exactly, speaking about how Chevron announces layoffs affecting up to 8,000 workers. This is apparently indicating stronger long-term competitiveness. The oil producer said that the layoffs are part of a cost-cutting initiative. The key takeaways are essentially this. Chevron announced internally on Wednesday that it would be looking to lay off 20% of its workforce in the next few years. Now again, I want to point these things out, we'll avoid this. I want to point these things out to you guys in their full severity with their full importance, right? This is not an insignificant portion of the workforce that we're talking about. We're talking about an entire fifth of their workforce potentially being gotten rid of in the next couple of years. This is a large amount of people. It's going to affect a lot of lives, a lot of livelihoods, and again, all in the apparent aim of extra competitiveness. And tying into that, apparently the layoffs play into the oil producers' goals to cut costs by up to $3 billion by the end of 2026. Chevron is reportedly offering employees a buyout from now to the spring. So this is important and this is all worth considering, right? The big thing that I want to point out here is the efforts to cut costs. This is exactly what we're seeing with a lot of these companies. So Chevron, the second largest US oil and gas company after ExxonMobil, told employees on Wednesday that it would be looking to lay off 15 to 20% of its entire workforce over the next 2 years. This could be between 6,000 and 8,000 of their global employees. Just think about that. Just think about the scale of what we're talking about here. Just think about the size of the company here. It all ties into the absolute significance of this. It drives towards a larger goal of cutting costs by up to $3 billion before the end of 2026, as per Barron's. At the end of 2023, Chevron employed around about 46,000 people worldwide, including 40,000 people across its operations and 5,400 people at service stations. The layoffs will only affect employees in operations. And again, that's another big thing, because I want to highlight who is actually going here, right? We speak a lot about how difficult it is to get a job at the minute, and of course it absolutely is. A lot of markets are struggling. But when we speak about a lot of these tech companies, a lot of these banks, a lot of these major organizations, and we look at who is actually being cut from the operation, who is being laid off per se, we see a lot of the time that it's not actually the base level workers. It's not the people at the service stations likely that are going to be being cut. It's actually some of the higher level workers, some of the, again, operations people. This is significant. This speaks to perhaps a trend change in the market that we're seeing right now. And what we hear is that Chevron is taking action to simplify its organizational structure. And we're seeing this a lot, right? It's always about efficiency, effectiveness, and long-term competitiveness, according to Mark Nelson, the vice chairman. And a lot of these companies are marketing this in this way when they're talking about layoffs. It's to be more competitive, it's to offer better value to their shareholders, it's to become more efficient. But one has to ask, when we are seeing across the board layoffs at the scale that we are right now? What is the reason behind it? What is the drive behind it? Especially when we're seeing the state of the economy right now, and we certainly are in a difficult time, right? We're looking at stocks being an apparent bloodbath. We've seen literally billions, if not trillions, wiped off of US markets in the last couple of days, in the last couple of weeks, with a lot of people now indicating that a recession could be on the way. And bear in mind, this was news that was announced last month. Perhaps this is not a good sign for the broader jobs market, and perhaps we're in a lot more difficult territory than a lot more people would like to admit.